It's amazing how much our banking system has changed, right? I mean, we're constantly hearing about new regulations and financial results. It's a lot to keep up with, actually. Yeah.
Absolutely. It's like a constantly evolving landscape. And this recent Bank of Maharashtra earnings report we've got, well, it throws quite a bit at us, actually. It's like peeling back the layers of an onion.
Okay, so where should we even start with this? It's, well, quite a big document, actually. I mean, what really stood out to you from this report?
Well, first off, the bank's financials, right? It covers their performance for the third quarter and 9 months ended December 31st, 2024. So, we've got recent data there. The report includes both standalone and consolidated results.
Right. So, standalone meaning just the bank itself, and consolidated includes any subsidiaries, right? That's pretty standard, I guess.
Exactly. And that gives us a bigger picture, right? A lot of the data, like their capital adequacy ratio and NPA ratios, are essential, like how healthy they are financially.
Okay, so like these ratios you're talking about, they're key indicators for investors, telling them about the bank's stability, right?
Precisely. The capital adequacy ratio, or CAR, for instance, it's like a health check showing if the bank has enough capital to cover risks. This report says it's 18.71%, which, seems pretty good based on what we see here.
Okay, so 18.71% is a pretty healthy figure. So what about the NPAs, the non-performing assets? I mean, those are the problem loans, right?
Yeah, exactly. And, the report shows that the gross NPA is at 1.80%, and net NPA is at 0.20%. So it seems they are managing them pretty well, actually. It's like a pressure valve showing how much bad debt they have.
That's interesting. So they've kept a decent check on their bad loans. So like that's good news, right? I mean, what else should we be looking at?
Well, the profitability ratios are crucial too, right? The operating margin was at 32.38%, and the net profit margin was about 19.77%. These figures also indicate how efficiently the bank is operating, actually.
Okay, so those margins are indicators of their operational efficiency and how much profit they are actually making, right? That makes sense.
Absolutely. I mean, you want to see those numbers going up, or at least, being consistent. It shows good control over expenses and strong revenue.
So now let's talk about the earnings, the actual profit figures. What did that part of the report tell us actually?
Well, their net profit after taxes was about 1,406.45 lakhs for the quarter, which is actually pretty impressive. So, a good chunk of cash. This means the bank is doing well, generating profits.
Okay, so that profit is for the quarter, right? So it's not the annual, number. It's good. They are showing progress. What about the 9 months result though?
Well, the net profit after tax for the 9 months was 4,026.71 lakhs. I mean, that paints an even better picture, showing consistent growth over the year so far, actually.
So it seems like they are on a pretty stable path, right? What did you make of the review report from the auditors? That was included as well.
Well, that's pretty crucial, right? The auditors gave an unmodified opinion, which, essentially means they didn't find any major problems with the financial statements. So that gives more confidence in the numbers.
Okay, so that unmodified opinion means they're not hiding anything, right? I mean, it's like a clean bill of health. So that's good to hear.
Yeah, exactly. But they did mention some emphasis of matter points, like they've been mentioning some things about the absence of a sufficient number of independent directors and maintaining COVID-19 related provisions too, actually.
Okay, so those are more like points they need to address, but not necessarily, well, a red flag for the bank's performance as such.
Exactly. They are more like areas for improvement rather than a sign of a failing bank. I mean, they are transparently disclosing these things, which is good, right?
Right. And transparency is really important when it comes to financial institutions. It builds trust with stakeholders and investors, actually.
Absolutely. Now, one thing that stood out to me was about the new capital they raised, right? They issued equity shares and bonds, which, helps with their long-term financial stability and ability to lend more.
Oh, yeah. I remember seeing something about that. It was a QIP, right? And they also raised some debt through bonds. What's the purpose of that capital infusion?
Exactly. The capital infusion, they said, will, augment their tier one capital, which supports future growth plans and enhances their business. So, like, it gives them more firepower to grow, actually.
So basically, more cash to expand and lend more. I mean, that makes perfect sense. What about these new regulations they mentioned related to Basel III?
Yeah, that's something every bank needs to keep up with. Basel III essentially sets international standards for how much capital banks should hold. So, this report mentions those disclosures, which you can access on their website.
Right. So those are international banking standards, making sure banks are stable and can absorb losses, right? I guess it's like an extra layer of protection, kind of like, well, wearing a helmet, right?
Absolutely. It's all about ensuring the stability of the financial system. They also mentioned their provision coverage ratio, which, well, at 98.28% is good actually, showing they've provided well for potential losses.
Okay, so they've provided for almost all their bad debts. That's, well, quite a big safety net. So, if things go wrong, they are well covered.
Precisely. And they've also mentioned the penalties levied by the Reserve Bank, which are nominal at 1.32 crores and also covered. So, they're not hiding anything.
Okay, so the report is pretty thorough, covering both good news and some areas of concern. It's like they've put all the cards on the table. So, I guess what is our outlook for the future based on this report?
Well, I think the bank is on a solid footing. They have shown good growth and they're complying with regulations. The emphasis on matter points are something to keep an eye on. But overall, the future seems positive. It's like steady as she goes.
Yeah, I'd say so too. They seem to be managing their risks well and are definitely on the right track. It's all about consistency and keeping up with these evolving regulations and the growing market. So that's, a good takeaway for our listeners, right?
Definitely. And it's not just about the numbers, it's also about how the bank is positioning itself for the future. And I think the moves they are making, like raising capital, shows they are thinking long term actually.
So, what's the key takeaway for investors, after looking at this report, actually?
Well, it looks like a reasonably stable investment, but as always, it's well important to keep monitoring future reports, to make sure they maintain this level of performance. It's a good sign when the numbers are robust and there is transparency.